we can do the TVP-VAR. Okay, so this is the script we are using, the static, even though I've added some frequency domain to it. That's just the name of the file. So we are going to use the main package is the connectedness approach. So you need to install it with line 2. But you need line 1 to be able to run line 2. Okay, so man, usually you want to put your date column in the year, month, day format. So usually format it in that sense. That helps for it to be read in R properly. Your data is OEAER_OF. I can say set TVP-VAR as a parameters, for example. Here, we want to be able to pick out the columns of the data. So we set column names as names, that's line 25. Then you also want to pick out the length of the column or the number of columns. And originally, the data had the date column, which we have formatted to be read as a zoo object. And the zoo object has data dot. We have formatted the date column. So we will just remove the original date column that we came with so that we can proceed, because it will not help with the descriptive statistics. And this set.seed, we can put as many variables, numbers as possible, because what it does is if someone wants to replicate your work, they want to get the same results as you, set.seed, and they use the same seed, then you can get the same results for replication purposes. Usually, I mean, sometimes it doesn't work, but that's the idea. And for descriptive purposes, we can just run summary statistics to see. So all those summary statistics that you may need, if you don't need them, you just choose the ones you want and forget about the rest. This is Elliott, Rothenberg, and Stock unit root test. I believe the rest you are familiar with them. This is also the arch effect test, which is usually the Bose-Young test of different lags. Okay, so this is basically checking if there are volatility clusters. And of course, you have your Pearson correlation metrics following. So you can make your own descriptive statistics or use these ones. You can do them one by one or put them together. The other package, I think we used the PASTEX package before, and that gave us additional normality test. So in terms of descriptive statistics, it's up to you, whatever you want to. And you can save it as well, CSV. So let's look at the setting the parameters. So we have number of lags. So if you remember, the method is already is originally a VAR method. So how many lags are we using in the VAR technique? In the ones we did, we checked for the VAR lag. In fact, we can check and see, then we choose. But lag 1 has always been the best. So remember here, this line. This may not work because this uses T. It uses time series. This one is a zoo now, but let me check. So the data is now Y. See Y. It works. How many lags is it saying we should use? We can use the SC1. Schwartz information criterion, that is 1. So it's okay that we are using 1 here. That's fine. The forecast length. N4 is the forecast length. For the connectedness indices, especially for the TVP-VAR or even the baronic, we need to look at the shocks at time t over a forecast length h. So the forecast length can be 10 or whatever, but 10 is very standard. You don't want a very long forecast length. Okay, now the unique feature of the TVP. So now, okay, let me write it here. This is the TVP part. We call this kappa 1, kappa 2. This is the forgetting factors I mentioned about, giving higher weight to current data and less weight to older data. Okay, so this is actually the TVP-VAR part. I mean the TVP. And you realize that here it says fit TVP-VAR. And in fitting that, there's something we call the probability distribution. There are different ones. You see, the most common ones are Minnesota and Bayes approach. The Bayes is based on the Bayes theorem, which we already know. And that's usually the best way. So Bayes theorem is just conditional probability. So what is the probability that the next window will come out with these numbers, given that we have already estimated the first window? So Bayes prior, how are we calculating our prior probabilities or values? So that's basically all there is about the TVP-VAR. And here we choose the connectedness that we want, and this will bring the outputs for us. And we want to put it in a table form, and then we can write it to a file. That's it. So if everything is set, I can run from, let me put this one here so that the comments are the forecast length. Okay. So I run from line 39. There shouldn't be any errors. And I can fit and get the connectedness, and I can see it in a table form. It may take a while. Okay, so for the TVP-VAR, the TVP portion, you see we have 0.99 and 0.99. That is giving higher weight. It's between 0 and 1. 0.99 is preferred because that gives much weight to current data as compared to older data. Okay, so let's see something before we make it complicated. Do you see that this is very similar to, so in effect, nothing has really changed. It's only how we got the connectedness values that has changed, and a few things that are there. So let's look at them. Okay, let me start from bottom. So here we have TCI and TCI. That is total, TCI is total connectedness index. The last one we saw was 46.96 for the baronic and Krellick, right? Yeah, so here, this is that one in TVP-VAR sense. Now, we have two here. Remember, we had corrected, which was counting the off diagonals, and the original one doesn't take the off diagonals. So if you go into the code here, realize that we have this portion. See this portion here, corrected equal to true. That is what brought the seed TCI. Okay. And usually the seed TCI is bigger because we are looking at off diagonals. So 30.65. So that's the first. And then we also have including on. Including on. You have to take that into account. So if you take here 65.23 and you add it to all the connectedness here, you get 96.52. If you take 65.23 out, you get 31.26. So usually we are not interested in including on. So normally, if I'm present, I will just remove that line. So you can just remove that line, but you don't want to present that. Okay, so then we have the net here and NPT. So let me explain the NPT a bit. So the NPT is the number of other variables that a particular variable dominates. So here it means that USD, GHS dominates just one, order flow dominates two, Euro dominates five, order flow dominates two, GBP dominates one, and this one also dominates four. That's what that means. Again, that metric I don't usually use it. I only focus on the to, the from, the net. So again, if you start looking at the values, we have the to and we have the from. So from G.
So the net is the net transmission or net, either net transmitter or net recipient.
Exactly. So here, USD for exchange rate is a net recipient, 3.48%. What? So if you look at Euro GHS, that's very strong for exchange rate. That is a net transmitter of 20, let's say 21%. The
Yeah.
weakest would be the CD against the pound, the net recipient of 17%. So with this, you can look for the dominance. So that's basically it. And this is for just the overall, the static one. So we can break this one into frequencies, and we can also expand it over time to give us more analysis. And in expanding it over time, that's when we really see the evolution of the dynamics. Then we can save it to CSV to look at it later. Now we want to plot this over the period of the study. So this is all. So you see the plot has come, but it's saying an error. It's because of the space. Let me expand it and run again. So that's one challenge with RStudio. When your plot is big, okay, it's good now. We have no errors. Okay, so what is this saying to us? But before we continue, look at the first one. The highest value is around 62%. So to get a nicer plot, we can reduce this to maybe 70 so that we have a compact plot. So you can try and modify the plot. So what we are looking at is the overall connections. And when you're looking at overall connections, you have to look at what is happening in the market. First, markets tend to be strongly correlated when we are in a crisis period. That is how markets collapse. They tend to move together in one direction, then they can all go and ditch.
Yes.
Then we also look at parts where they are a bit stable. That may be the fundamental relationship between them. Nothing is really happening in the market, so they are stable. So those are the parts that we have to check, which means in your study, the best way would be to, in fact, you know your date, but you can also try to show them in the plot. So if you look at, so let's look at it here. This is somewhere, where does your data start from? 2018.
2018.
Right? And it's daily data.
Daily, yes.
So if this is 2019, then 2018 maybe start from beginning and end maybe somewhere here. So this system of variables that you are working with, you see that fundamentally they seem to be connected. I'll give it around 25%. If you set it at say 25, you look at this side, see all the way up to say end of 2022. This is what seems to be the fundamental relationship between them. The rest seem too much. Look at the rest of the period. So from say beginning of towards the end of 2022, they tend to go very high. and look at an episode in early 2018 as 50% when the maximum was around, let's say, 36%. So that you have to check what happened at this period. Those are the points we want to bring out. And you can also talk about the low periods. The lowest is around beginning of 2021. Yeah, that's about the lowest point here. Okay. So what could account for the fact that from 2023 the connections are very strong and they go all the way to a little over 60%, let's say around 65. You have to find a way, find what the possible
There was
explanation.
we had an exchange rate crisis in 2022, which spilled over into 2023.
Okay.
So, yes.
That's fine. So this is where you start to now differentiate between your interdependence and say your contagion, because those are the two areas. Contagion is extreme interdependence, high levels of interdependence, which tend to be standing. The typical one will be this one, the first one, the 50. See that it was 50, it was all the way to 10, then it shot to 50. Then it ended there.
Yeah.
If you look at this one, that's a big problem for us because this prolonged over a long period of time. So here we are not just talking about the fact that there's connection in the market. This connection is extreme, and that part may be termed as a form of contagion if we are not being too nice. But what is the idea? The idea is that this is checking connectedness, and we have been able to, in the TVP-VAR, we assign more weight to current data as against older data. This is also looking at a time varying mechanism. It is also looking at all these nonlinear asymmetric relationships, which they come out easily. Look at the relationships changing all over the place. If you use a single metric like correlation, you will not be able to get this output. Okay, so that is the first plot. That's total. Then we can look at the net also and see how it looks like. So look at the net here. So the net is, again, for every one of the variables against the whole system. Okay, so let's take the first one. So if you look at the table, all the portions below are the negatives and the portions above are positive. So if you look at the first one, it means that between 2019, okay, so let's look at this, but this is like first quarter of 2018, right? Yes, so that part means this variable transmitted more to the rest of the variables than it received. That's why it's positive there. So at that point, it is a net transmitter. If you come down here, for all this period, it is a net recipient. As well as this point, and then, but here it is rather a net transmitter. Here it is a net recipient, and the whole of this between 2022 to the end, your data ends with 2024. Yes, so all the way to 24, it is a net transmitter, but not as in higher quantities as when it was a net recipient.
Yeah.
So if you gauge it, you can see that overall, this variable is a net recipient. But of course, it's not constant. It changes over the period. So you now have to explain why is it a net recipient at some point and at other points it's a net transmitter. So those are the things you need to bring out. If you look at the second one, the euro, that is, I would say compositely it's a net. That seems very clear. The order flow for the euro GHS. The USD GHS for order flow will also be a net recipient compositely. But the euro, as we got it from the table, the euro is a net transmitter for the whole of 2018 to 2022, but the net recipient for the last 2 years. We have to explain that. And compositely is a net transmitter. And we can see the GP on Ghana cedi in terms of order flow is almost fully a net transmitter. A few areas where they were recipients. If I look at plot, say the euro and the pound, you may want to expand the length of the plot. Maybe the 20 is not enough to capture everything. So maybe you can make it, let's say 40 and see. Looks like some portions are missing. Make it 40. See, that's better. It looks like a lot of something still wants to come for these two variables. And even for the negative part, we can expand it. But I think this is better. So that we see everything. So you can make that modification. Then the net pairwise, so NPD is net pairwise directional connectedness. That's what it is. So that's going to compare them one after, in two pairs. How many variables do we have? We're going to get, so combination in terms of, we're going to get like, I don't think we will be able to contain them in this plot. Let's see. We're going to get a lot, but I'll see how many we get to see. Okay, let's make the positive like 20 and see, so that we can see the euro GHS will have freedom to express. So let's make this 30 and see. That will be better. That's better. If we keep expanding, the rest will be too small. So let's stay with 20 and see. There's a way that you can pick the individual ones and make them bigger or smaller. I think I'll try and deduce it for you. So here, the arrangement is the first one is the from and the second one is to. Yeah, so here I can see compositely the rate is a net transmitter to the flow, which makes sense. And let's look at the USD order flow against euro. Okay, let's look at the same exchange rate and the order flows and see if there's a correlation. But it doesn't look like it is the same for the next one, the dollar. So okay, it's not the same variable. So where is the euro? Where is it? We are looking at this one now. So for this is difficult for me to say. No, I think it's still net transmitter. Apart from here, if you compare all of that to all of this, it seems that the exchange rate is still the net transmitter to the flow, to the volume. So this one, you realize that the exchange rate is almost flat out net recipient. So when that happens, we have to explain that. Okay. So this is how okay, now let's look at, this is the euro and GPS. Euro and pound in terms of Ghana cedis. The euro is obviously a net transmitter all the way until 2022. And beyond that, for the last 2 years, net recipients. Need to find explanation for that as well. You can export it once, either to PDF or PDF or image, either of them. You can copy and save it to Word file. So if you can give it the name that you want. So that's fine. Then I'll show you the network plot. So the network plot, there are two options. We have the pairwise connectedness index or the net pairwise directional connectedness. So this is the best one. If you do the different plots, you'll see. So this is what this one will do. It will check all the connections around the variables, between the variables. It will also average them and give out the connections that are strong enough to create a link. And then you will see the width of the link would tell the magnitude of the connection, and you know whether one is a recipient or one is a transmitter. So you see the negative part and the positive part. One will be blue and one will be yellow. Okay. And the threshold here is the sort of cutoff where you want to present some correlations or connections that are too small to show. So if you cut it off here, any connections that are less than this may not show. So you have to play around where you want to cut off, depending on the plot you see. This was for my data. I don't know how your data will look like. Now I'm running at a different, this is the plot. Okay, so we are here. So what is happening here? First off, okay, those that are not connected are not strong enough. That's what it means. And we can confirm this one briefly. So the blue ones are the positives, and this is the gold or what? The negative. And there's an arrow. Yeah, sometimes the arrow can be small, but if you look at here, there's an arrow. But there's another one here. You just have to look carefully because the line is thick. There's an arrow there. So you see the direction.
Mm-hmm.
And so the euro transmits the most to the
Pound.
pound. And the pound here is a net
Recipient.
and the euro is a net transmitter. And you can also see the size of the transmission. See, it's almost the same amount that is transmitted. So it means that the euro is not transmitting any significant amount back to the pound is not transmitting any significant amount back to the euro. That's why the magnitude of transmission is almost the same as what is received. Now,
But how do you know the blue is the positive and the yellow is the negative? It's based on the direction.
so exactly. So that's not the literature, the method. I can confirm briefly because if you have read about the method and the manual to show, let me check. Okay, so here, the size of the nodes, vertices denoted weighted average net directional connectedness, suggest magnitude. The blue and gold nodes denote net transmitters, so that's for the blue. And the gold or whatever yellow is net recipient. Okay. So the manual that accompanies the method will tell you. Okay, so if you look at the rest, look at this one. So this is a net recipient. We know it's also a net recipient. This is also a net recipient. Of course, this one is coming from the euro. I realize that this is not as strong. No, the connection between the euro and USD is not as strong as the connection between the euro and the pound. So if you look at this, it is almost to the degree where the connection gets severed. That's why it's thin. So for the rest, the connections are not that strong to be shown. Then we can modify the threshold and see what happens. We modify the threshold to say 0.1. And for example, let's see if it gets nothing changed. Let's change it to 0.2 and see. nothing changed. It's like the relationship, that's the best they can come out with. So having done your tables, you can also get them in a network. That's a compression of all the relationships. Okay. You can do this one also in frequency domain. We can just run that one and get here, then we can close. Okay, so now you are going to give me the frequencies that you want to use. How many frequencies and what are the lengths? You can adopt the one we used earlier in the other one. So 1 to how many days?
1 to 4.
So this will be 4. And then,
And say 4 to 8.
so pi over 8. No, 8. Where is 8? Come on. That's it. Then they will 8 to infinity.
Yes.
So we can we can indicate the partitions, and the rest is just game on. To take maybe a little while to finish. Yeah. Okay, so the estimation is done. This time is going to be in frequency domain. So this table could have been nicer. Okay, so this is in each frequency. It's not coming clearly. We'll see it in the plot. So you realize that we have 1 to 4, we have 4 to 8, and then 8 to infinity. Let's look at the plot. Maybe 100 will be too much, so we can make it 70 again. 70. So the good thing with this one is that it will give you the colors for the different periods. So total is the black one. That's the one we saw earlier, the first one, the first plot. So, and you realize that usually that will be more than all the rest because that's so you see your short-term dynamics, that's the red one. Your medium term, that's green, and your long-term blue. You see that your medium term is very, very small. The short term and the long terms are quite strong. But look at the long term. The long term, the key is that the long term is smaller than the short term. That is very important. That is a fundamental relationship. Even so, for the last 2 years has been very difficult for us. And it's showing in the data, of course. That's what happened in the market. But the short term, that's when the market is usually dancing. So we can almost talk about the same things that happen at the total level to happen in the short term. Yeah. And then if you look at the red one, the contagion that we said from the beginning of 2018, you realize that the blue is almost insignificant, the green is also insignificant, but the red one, which is the short term that captures market disruption, that's clearly coming out. Yeah. So that is for the frequency domain. We can do that for the net the same way. Let me expand this plot for the same way that we did for the total. So this one is breaking it down into the time horizons. Again, we see the short term being the dominant one. The euro dollar is a net transmitter at all the frequencies. And when we go to where it is a net recipient, it is still the short term that is the largest. And the pound is also a net recipient for the most part. It's still the short term driving the market. We can check the net pairwise. So that's one against the other, as we saw. And we also know how to interpret that. And lastly, we can get the plots in frequency domain. So this one, we are going to have how many plots? 4, 3, and the total, or maybe the total will not come. If I remember. So 1, 2, 3, 4. So the annotation is covering the whole. So let me export it so that it becomes clear. Let me zoom in. So this is almost a duplication of the total. So the first one, second one, the third one, and then the total. Yeah, then that's the arrangement. Oh, we can confirm that. So the 3 for the frequency domains and 1 for the total. Now, so then this will be for the total because this is exactly the same as one we saw earlier. It was for the total. Yeah, the total is the first one. So there's the total 1 to 4, then 4 to 8, and then 8 to infinity. Okay, so this is almost the same as this one, but when you get here, you see the medium term. There's another. We get an additional link between the Euro GHS and the pound.
Yeah.
And the pound is transmitting to the Euro from, and both are other flows, but not as strong as
Yeah.
this
The
one.
exchange rate.
And this one becomes stronger. Can you see that the transmission from 8 to 4 becomes stronger from 8 to infinity? See, so we can explain what is happening, but the remaining ones are still distinct. And if you look at this strength, this link is stronger here than in the short term as well as in the total. So we know the theories that can support this. We talked about fractal market hypothesis, the adaptive market hypothesis. I mean, we know all the theories that we can use to explain these things.